Hello and welcome to Options Trading Pilot. I'm your chief pilot, Proforma 24, and this is my cohort and buddy, John at Options Trading Pilot. Come join us. What an incredible week, John. We saw the depths of despair. We saw the hopes on Wednesday of lifting out of this crazy bearish tone, and then we're closing on huge weakness, John. How are you doing, man?
Hey, I'm good. Good. Yes. What a weird week. I think we do like volatility to trade, especially how we are mostly premium sellers. So I think I was thinking about what the ideal is. It's probably 1.25 up or down percentage in any of the funds. Any of the indexes are probably really good trading ranges for us. But when things go up or down 2%, 3%, it starts to really chew into your profits. You really can't protect a strangle or even a bear put or a bull call, a different spreads with the 3% move a lot of times. So it's been a little tough. We haven't traded as much. I think now I'm very, if I'm looking over my positions that are not as many as I usually have, I'm mostly negative, mostly bearish on the market.
Yeah.
What about you?
Yeah, I mean, I've been holding cash for my trading account a lot. For my midterm account, I am holding a little bit of tech stuff, but I like the deep in the money calls on those, and those printed for me to offset the losses on those. And then on my long-term portfolio, my real big money portfolio, I'm sitting on IEF and STIP. So obviously this channel is more for traders. So let's get into that. I wanted to kind of do a brief review of why we think things are looking as somber at, as far as on the bearish side for us, where, it doesn't matter the direction, right? I think you and I both know that the bearish direction tends to be faster acting and moves down faster. A little more difficult, obviously, to trade that. You got to have more conviction on those trades and get out when they fail. But on the upside, it takes its time. But overall, I've just been leaning towards more cash. I did go a little bit heavy today on SQQQ calls, just because we're expecting the market to have a tough time next week, barring Putin saying, "Hey, I'm going to come to my senses. I'm going to get out of Kiev and get out of Ukraine and call peace." So barring that, I still think we're in a tough time, John.
Yeah, I do too. I was just looking, the futures are still active for a few minutes. I was just watching those after the market closed. You have your screen on there.
Yeah.
Can you get to the NQ?
Yep. Can you see it?
Front month, the H2.
Yeah.
You look at the MACD, it's way off. It's just an ugly looking chart.
Yeah, let me bring that one. Let me show
Yeah,
you
you can
that.
see it up in the upper right hand corner or upper left hand corner of yours. That has just that's just Friday, right?
Yeah.
Yeah. I think the challenge is nobody wants to hold risk over the weekend.
No.
The only risk I really want to hold over the weekend is the short risk, because it's 2 days of news that will come out on Sunday night when the futures open.
Right. This MACD back on. I don't know what happened to my MACD, man. Oh, everything's super slow. That must be everybody trying to sell. Okay, here we go. Now, to our audience, I'll show them the MACD that I like. Just take a little second to do that. I don't use your 12-26-9. I think the 535 learned this trick from an article that I read, and I really like the 35.5 if you're a trader. It's more sensitive, it's a little more noisier, but you know, since I don't solely use the MACD to trade, it gives me kind of a, hey, you know what, this may be happening. And so I look at my other things that I look at to kind of preempt me. But you can see it's way down here, man. You can see that it's struggling. It tried this morning. You can see that with this wick here. It tried this morning to get above. And, you know, we were talking about the low from Tuesday, right here, or the midpoint from Tuesday. It needed to really close above that. It really, like, this was the one bright spot was Wednesday. And, you know, the midpoint was here, and it battled hard yesterday to stay above that. And today it really hung out, and I felt like that 13,450 number was super important, John.
Yep.
And you could see the daily chart, how much it fought to stay within that.
It did, but it seems like every, you know, back in 2020, late 2020, 21, every down was a buy.
Yeah.
Now, every time the market's up,
Yeah.
it seems like it's met with selling pressure.
So you can see it stayed battling from 11:30 in the morning till finally give it up around 2:45 or so. To battle for like 3 hours to stay around that 13,450 number. And, you know, when you're aware of the price points that are important, John, it's really entertaining because you can see the two sides really going against each other. It's attack, counterattack, right? Attack, 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 counterattack. One more last breath. Maybe they reach their limit for the day that they can risk, right, to push it up. They don't see enough participation. They're like, okay, we give it up. Let's regroup and try another time. But, you know, it's like, I really like seeing that perspective, right? You have two sides. You know, it's like the widely known one, John, is, and I don't know what Soros is holding right this second, but the article that I read was that he had like lost $1 billion on Rivian, and obviously lost more this after earnings. But when you're aware of that you know he's long, and you know he's going to try and defend that position, right? And you do whatever it takes. So yeah, I think things look really bad, John.
You know, and something I do too, and something that I was saying to our subscribers today, we had 3 trades last night: Rivian, Ultra, and DocuSign. All 3 were winners. So trifecta, perfect. Could have traded better because I could have taken one side only of the market. But the way that we trade, DocuSign was down around 20% today. And I had a naked put, a naked call. I ended up making, I think about 20% on that trade, or 18% on that trade, even when the stock was down 20%. You know, that's a big deal. If you own the stock, you just got a 20% haircut on your on the value. And DocuSign, as you know, has gone down. You know, it was a huge down, and then last quarter was a huge down.
Yeah.
So, you know, I don't have it pulled up right here, but we probably have lost 65% of DocuSign's value in the last year. I don't know if you can confirm that, but it's something in that magnitude.
Let's pull up that chart. Yeah, Docu was a nice winner for us. So it hit the peak at 314.76 and is now $74.85, it looks like.
Okay.
I mean,
yeah,
that's huge, man. You know, and there's companies that we like SoFi. I like SoFi. Look at SoFi. 855, John.
Yeah, you know, that's an amazing thing. And the SPCE, if you look at that one, that's also one that's had
57.51 to 728.
Yeah.
So I read an article, and I haven't double checked this, so guys don't kill me on this, but I think everybody knows that the breadth of the market, especially in tech, is something like 60% of all of tech is down at least 50%. from its highs.
Yeah, I think that's about the right numbers.
Yeah, to me, it's like we're not just in a bear market. The only thing keeping us up is those indices look like, hey, we're down, but we're not getting killed. But it's, I live in Florida. You live in Florida, John, and we know all about what is that, limestone that's underneath us, and it caves in, and then you get a sinkhole. I think that's what we're seeing, right? We have all of the supporting stocks, and then the main stocks, the Apples, the Nvidias, the big players, the Microsofts in the world. They took one of the big ones down, which was Facebook, right? Facebook continued to decline, 761.
The meeting I was in Orlando, that dinner meeting, the analogy they used was, it's like a two-story house and they've taken out all the supporting beams. The house is still standing, but the insides have been gutted out.
You just have to blow it on it and it'll fall.
Exactly. And is that something you want to be in?
Yeah, that's exactly right. That's exactly right, John. And look, and I'm just gonna get on my soapbox for a second here, John. So basically my soapbox is this. My mom told me the other day, she's like, she had been using her debit card at the gas station. And I was like, Mom, like, like the gas station is the perfect place for people to steal your information. They put scanners on the gas station pumps. They sit in the corner, they're reading to steal your information. If you want something stolen from you, it should be your credit card, because at least the credit card companies do back, if there's fraud, they're going to make you whole. But yeah, maybe the bank will make you whole, but you're out of cash. And I mean, that's a bad place to be. So she tells me, I've always done it that way, son. It's never been any problem. And I'm like, okay, Mom. Well, the reason I'm bringing that up is because a lot of people are saying, listen, buy the dip, right? Or I've always done it where I have, a bunch of asset classes and I just keep them all in there and I'm always in. And yeah, that's been fine. And you've been super wise that that's happened. But what's going to happen when that changes, John? And it will.
Well, what the challenge has been is we've been in a 30, almost 40 years of the bond market doing very well. Interest rates have been going down net, right, for that period of time. And so if you look at most portfolios, people talk about, well, you have a mixture of stocks and bonds. Well, if you're in stocks and bonds right now, you're losing on both sides. And that's something that it will change some of these truisms or things that we think are so true, but in the end, they're just happen to work for the last 25 years.
So I'm now like a true believer, risk on, risk off, right?
Yep.
It's like get in there. The obviously there's weakness in that too, right? We don't have a trending / momentum market. You're gonna get those switchbacks and your portfolio gets eaten up a little bit, but that's the downside. The upside of that is if we do lose 50% and we stay down there for 9, 10, 18 months, guess what? You didn't lose 50%. You might have lost, say, 20%. Okay? It's better than losing that extra 30% for that much time when the things start coming back, which they will, right? Barring revelations happening. Then you can buy back and you have more powder, right? You stay dry, you keep your powder dry, and you take your shots when you can.
And I don't mind getting to some lower levels here, like you said. Now I've been surprised. I mean, there's quite a few stocks on my wish list that I really want to buy, but I have been hesitant because there just hasn't been a base to do that. And I don't think we've missed out on anything just yet. on the
You're
upside.
right. Yeah, I think you're right. I don't think we've missed anything. So, this too shall pass, one way or another. And so I was telling, I think I told you earlier. So, this isn't the only thing that I do. I also manage money for a lot of clients. And so the way it's set up is I'm the strategist. I'm the guy that has that earned the charter from the CFA Institute. And so I'm the analyst. I'm always looking at research, testing, prodding, doing all these things to make sure that our clients are in the right position. But I'm saying all that because I technically don't answer the phone like that. I have partners that do that. I have a team that does that, but more handholding had to be done. And from Monday to Wednesday, I was on the phone more than I've been the prior 2 years, John. If that's not a telling thing. Yeah, and when I say the prior 2 years, combined the prior 2 years. It's like
that are
just nervous.
Mm-hmm.
And it's interesting because like they see that we're out of the market. So I'm like, why are you nervous? We got you, man. It's fine. Everything's fine. But as a trader, and look, the trend is down, but it's a tricky one. Let's say you're short on Tuesday, right? And you got the 4% increase. You either got stopped out or you ate it big, right?
Yeah.
And you bought more at the top, like you bought more puts at the top, or you sold more calls at the top, which you and I did some of that. So it's tough. Like scalping is probably the thing to do. But even then, like I was talking earlier, and I think you made the comment, like the range, the one candlestick can take the whole range of your market structure.
Yep.
1 5-minute structure, and you're like candle, and you're like, well, how am I supposed to trade that?
Exactly. And so, and we, it seems like we're constantly battling that. Very little times do things like go your way immediately. It seems like you have to wait things out, and wait for your, wait for everything to go with your assumptions. Sometimes it takes a little while to get there.
Yeah, that's for sure. So just some ideas of how we've been talking about things, John. Tech, obviously a lot of those, the earnings per share are negative. So I think the refocus into value is key, right? High dividend paying stocks. I know you've been looking at 3M, continues to fall. One of the ones that I do like, that I have some on my midterm money into is Verizion. It's done well. It's paid me a dividend here and there. So it's been really nice. It's at 53.04. I think my entry point was like around 40, 49 or like right at 50. So it's gone up. Notice that the trend is generally up. So despite all the issues that we've seen, it's been a good trade. And then obviously energy has been a big deal for us. I like Devon Energy. I've been in Devon Energy here for a little bit, just because commodities is where we want to be. And then you and I have taken some nice gold trades, right?
Gold trades, silver trades, commodity trades. Oh yeah.
It's all over the place. So it's an interesting thing, and I don't want to like spend the whole time talking about it, but this correlation, there's a disconnect, right, between how things used to be correlated, like bonds versus equities. There's been a change to that somewhat. And then what's been super surprising, John, is the general steadiness of the coins, Ethereum, Bitcoin. Like they have fallen, but not like the market has, right? At least right now, short term, since Ukraine. I mean, obviously, I'm looking at the Ethereum fund here. It's like it hit 47, it's all the way down to 20. So then you might be saying, Guillermo, what are you talking about? It's also down 50%, or more than. So maybe I'm not saying anything, but I think in the last 2 weeks I would have anticipated more of a drop, is what I'm trying to say, and we haven't gotten it. So I don't know, man. There's a lot of interest rates are going up and TLT goes up. TLT, the 20-year treasuries, it's up today. Yeah, overall it's still looking negative.
Well, I almost pulled the plug and I was going to start rolling some things up. And I decided, no, I'm going to stay the course. One day does not make a trend. And I went ahead and just stayed the course short. Sorry, I'm just checking some of the futures here before we finish the day. So, but good. I think we've had a good week. I had a good trading week, made some net, made some good trades, made some good money, and look forward to coming back next week. Hit it hard again.
Tim here had a good return in the end for the week. Once again, another winning week, but listen, we also feel it too, John, the stress and the bumps and the bruises of the market. And you and I talk all day about our mental situation. So some of the wise counsel you've given me and other friends have given me is hey, keep your head on straight, keep going. If you need to take a break, pull back, take a deep breath, and all those things.
Sometimes a nap is good.
That's true. Nap is good. That's true. All right, John. Well, I hope you have a great weekend, you guys out there. Stay safe this weekend. We're gonna get a lot of rain here, but Sunday should be amazing in good old Florida, in the North Florida side. But anyway, click a like, subscribe to us, go to our Discord through www.optionstradingpilot.com.
Great. All right, Guillermo. See you next week.
Yeah, man. Bye.
Bye.